Let me try and conclude with the most common question that you would be coming across, but it's a necessary one. What is Alder Capital's market outlook from here?
The near term versus the long term, right? The near term challenge is that the global economy is stepping its foot off the liquidity pedal, right? You have had the biggest stimulus that all central bankers around the world have done in 2020. The highest liquidity injection that has happened post-COVID, right? That stimulus has any which ways been on a downslide in 2021. Now you have another problem that all this liquidity which has been injected into the system by the central bankers, not India. India's stimulus was relatively very less, but I'm really talking about the major economies, is finding its ways into assets, commodities, real estate, name it. And it obviously found its way into equity markets. So while this normalization process is happening, now you have bankers, and the first one being UK, which took up its interest rates. I think that calendar year 21, you're going to have a rising interest rate environment with high inflations and obviously low liquidity, right, versus what it was in the past. In that scenario, typically you would have asset prices globally at least move sideways or probably move downwards, right? In India, as we speak, we have another unusual situation, as you might call it, as is that many businesses are coming up for listing, right? What many businesses, when they come up for listing, do is they suck out more liquidity from the market, from the secondary market. So effectively, stocks that you and I own, right, have got this pressure of people trying to sell those to buy the new businesses, right? And therein, the issue of markets prices of the existing businesses trying to do another new high seems to be a little bit difficult. So in the short run, I think there are more challenges. The positive is the fact that we have had earnings growth in India for the last 2 years, which is at over 23% CAGR. I'm including this year, which I believe that we will end with a positive note. When was the last time that we had 23% CAGR in earnings? Well, that was way back in 2008. Now imagine that we had said this to anyone that you're going to have tremendous earnings growth in corporate India at the time when COVID has hit, right? Nobody would have believed it. So markets are unusual. Markets are full of surprises. None of us know everything. That's the caveat out here. But the point being, if we continue that journey and we have finally managed to do earnings growth that we have desperately wanted for over a decade, right, since the financial crisis, and we have not got it. And in last prior to this, we were growing at an earnings growth of around 5 to 6% as corporate India. We're finally doing it. Thanks to what? It's thanks to the formalization which is happening in a big way. And that's contributing to higher tax revenues for the government, which is actually the highest level. The government will be exceeding its tax budget for this year, which is a rarity as well. Right? It never happens that you predict and you exceeded it. So all these are the positive things. So we have certain positive things which will dampen this impact of liquidity outflow. So in the near term, it's a challenge. I don't think markets have got serious legs to outperform.